All right, hey everyone, Mark here. Thanks for joining me. Sorry I'm running a little bit behind, but what else is new? All right, let's get this thing started right away, shall we? This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me know if you can't see my screen or if you can't hear me. Well, if you can't hear me, you're not going to be able to let me know. But all right, let's get this thing going. Let's say hello to a few people. I got Paul out there. All right, cool. Good to see you. All right, I'm going to make these charts here bigger in a moment. Real quick, let me just say a few things. If you'd like to join my Discord community, there's a free link in the description. I suggest you check that out because I have a lot of new features that are coming. Okay. Hey, Joel, good to see you. All right, so definitely check that out. There's also a learning resources channel that's in the free area, and there's a lot of really valuable information in there. Now, you may not think it's valuable because it's not sexy and it doesn't give you any kind of magical trade strategy, but what it does give you is it points you to a strong academic foundation, and that's something you really need to grasp if you want to get anywhere in this game, especially as a day trader. Okay. Now, in this session, I'm going to be talking about Bitcoin and Ethereum on the day trade time frame. All right. So I'm not taking questions about like the bigger picture and all that stuff. We're going to use some of those concepts that I teach, but we're going to apply them to the day trade time frame. Now, just so you know, this is the absolute worst place to begin as a beginner. All right. You really should learn the bigger picture first. You should understand how the bigger picture works and how markets work in general. All right, before you get to this point. But the goal behind this stream is basically it's a exercise in the day trade mentality. So you can see basically I can explain the decision making process that I make based on an abbreviated version of the steps that I teach. Okay, the idea is to get an objective view, but we want to capture momentum on smaller time frames. So first, let me just switch this chart over here. We're going to make this an Ethereum chart. Let me just pull this over. Let me pull this out over here, and let's go to Ethereum. And let's see. Actually, I shouldn't even be doing that. I should just be going to the perp chart. So let's change this to a 5-minute. And let's go to Ethereum. Actually, I guess it would be ETH perp. Let's see what we have here. So I'm going to put Binance on here. Okay. Again, you should use whoever you use, whoever your exchange is. Okay. So that's the Ethereum chart. Now, the whole point behind this, first of all, is to give an idea of how these markets trade together. They don't trade in isolation, right? I see a lot of novice fake gurus. They're supposed to be experts, and they always point these things out and give the idea that these things trade by themselves in isolation. They do not. They depend on other markets. Okay. So that's why I always tell people pay attention to the bond market, pay attention to these other markets, pay attention to the NASDAQ. You need to do that. Now, as a day trader, let's start here with the 30-minute. Okay. You want to first get a sense of intraday perspective. Okay. Now, I'm going to change this to the perp chart as well. So let's go. This is the 30-minute, but we want BTC perp. All right, this is the perpetual futures. That's what perp means. Okay, and let's go there to that. So it's basically the same as a spot chart, but there may be some minor things that are not the same. All right, in terms of movement and the way the candles close. But these are the charts you want to be paying attention to if you're looking to day trade these things on the exchange that you trade on. All right, now let me make the charts bigger. All right, so that this makes sense to you guys. There we go. And I got a lighting problem here. Anyway, all right. So now we can see we have both charts. Now I have a 5-minute Ethereum, but I have a 30-minute Bitcoin. All right. So why? Let me explain. So first things first, I'm looking for perspective intraday. Now I emphasize intraday because we're only, as a day trader, we're only interested in momentum. So it doesn't matter what occurred 2 weeks ago. It doesn't really matter what occurred 2 days ago. It does not matter. What we're interested in is now. So if we're going to look back, a 30-minute chart is appropriate, because basically it's going to give us some structural perspective for today, what's transpired today, and part of yesterday, right? That can be useful. Part of yesterday can be useful, right? It depends on the situation. So as I zoom out here, I mean, this is going back a couple of days. Okay, fine. But I have yesterday in there. I have the day before in there. That's enough. Okay. I don't need to go further than that. So don't waste your time with a daily chart. Go, oh, look, on November 10th, there was this resistance here. It means nothing for day trades. Okay. Again, this is the day trade mentality. The other thing about the day trade mentality is we have to be open to both sides of the market. So there may be short opportunities here, which would be counter trend. Okay, but there may be short opportunities. We need to be open to both sides. The thing that you have to have the least is an opinion. You must not have an opinion, and you can't sit there and say, well, I think it's going to go here. You can't do that. All we can do is basically gauge possibilities. Now, there was a clown that sent me a message about how trying to convince me that markets are forecastable. Okay. So look, this is a big lie that when we first come into this game, we like to believe, all of us. I believed it too. I believed it for a very long time. Okay. Markets on the long term, especially the long term, are not forecastable. Now, on the short term, they are slightly more forecastable, especially since markets trend. There's this thing called efficient markets hypothesis. It's in the learning resources channel that I mentioned earlier. You should be very familiar with that, especially as a day trader. Markets are not getting less efficient. They're getting more efficient each day as technology improves. More efficiency is not good for you or the day trader, okay, or the retail trader, because profit comes from inefficiency. So, efficiency is good for everyone. No, it's not. Okay. And if you don't believe me and you want to think that's just one of my wild opinions, go back to the days of open outcry. Do you guys know what that is? They used to be pits like the S&P in Chicago, right? Chicago Board of Trade. And there used to be this large area where people used to yell and scream at each other and somehow make millions of dollars, right? And today, there are no more pit traders. I mean, there are barely any. And it's not a good game to get into. Why? Okay, I actually spoke to a guy recently who was a former pit trader. He's no longer in the business, but he spent at least 10 years at the SIBO as a market maker on the floor. I said, why would you quit? No more advantage, he said. And I said, what was your advantage? He said, proximity, meaning he couldn't get any closer to the price action than he was. He was in the pit. Okay, number one. Number two, he had advantages with leverage, okay, which the retail trader does not have. Anyway, those advantages have been taken away by efficiency, by the computers. So now he's not even in the business. Now he runs a tutoring franchise thing for little kids or whatever. So that just goes to show you efficiency. It's your enemy, all right, as a day trader. Anyway, so that means, we don't have any advantages. And we have to basically derive a temporary advantage. And that comes from the behavioral side of the market. All right. So one of the main things that I try to teach people is that there are two obstacles that you really need to get over to really start seeing any progress in this game. The first obstacle is yourself. Most people can't get through that first phase. They can never get beyond themselves. That's ego, that's greed, that's fear, that's the inability to control yourself. Okay, and control you. Instead, you consume the garbage that you consume and you act on it, right? That's a problem. That's you that you have to get over. It takes a long time. It's not easy. And then the second part of the equation is the industry. You have to understand how the industry works and how the industry makes money. And when you understand how the industry works and you understand like the traps that they basically plant for you to stay in your mental mode that you stay into. I don't know how to explain that. Until you get beyond all those things, you're not going to have effective perspective. All right. So enough rants. Let's talk about trades, shall we? All right. So the whole point of that was I want to get a sense of structure. And we see that here on this Bitcoin chart. It's pretty clear. This is not bearish. Okay. That's bullish. That's perspective right there. So if that's the case and that structure holds, then I should be expecting supports to hold and resistances to break. Okay, now here's the thing. Look at this price action. This is not exactly continuation of bullish. It's a lot of hesitation. Okay, this tells me, you know what this tells me? A lot of longs are getting long because they believe nonsense and they're getting caught. Okay, more and more longs are getting caught. That's what they're doing, but they don't realize that they're caught yet. So that's something I have to put in the back of my mind. Okay, so I know my general perspective is bullish, but we can get some short trades when we see a situation like this, because this is, we can almost consider this a consolidation, right? And in a situation like that, I want to be aware of the extreme resistances. So, but hold on, we talked about that this is a bullish trend, right? So I want to be aware of supports first. These are my support levels. So here we have this right here, which is what? That is 20,681. We're nowhere near that. We have this area right here, okay? Now this is based on a 30-minute. That's basically 21,000. Those are my levels. Right now we're at 21,400, right? So that's kind of a ways from those levels. Can I find any more minor levels for day trades? Yeah, we have one right around here, okay? So we have, what is that, 21,214, and that is basically the low. Well, 315 was the low of the current candle. All right, so we're getting into some levels there, right? So basically we can say, all right, we have a little area over here, and this area can be considered an intraday support. Because keep in mind, I'm not going to use the 30-minute chart to take my trade. I'm going to use the 5-minute chart. So the 5-minute chart is going to show me some more detail, right? But I want to get some perspective from the 30-minute first, so I know what to expect. I can anticipate certain types of price behavior. Notice behavior, okay? So that's my support area. This is my resistance right now. That's my resistance. What price is this? That's around 21,458, right? So 21,460. We're fooling around 425, right? So we're kind of close to that resistance. But the thing is, I'm not going to be Captain Obvious and say, oh, I'm going to short it right there. I'm not going to do that. I'm going to give it some room to give me some extreme prices, right? So this is really the area that I'm interested in as far as if I'm going to go short, 21.7-ish. So somewhere between 21.5 and 21.7, that is a possible short setup location. So this gives me now some sort of point of reference for my intraday game plan. I should be looking for longs around the 20, what did I say, the 21.3s, 21.4s, okay? I should be looking for long setups there. I should, if I'm going to look for short setups, I should look for them up here, okay? Because again, the bigger picture is generally bullish, bigger picture in terms of the 30-minute chart, and a higher high is within reason, okay? So we don't want to get caught short too early. Like we don't want to short it here and think, oh yeah, I got the top, when this thing has plenty of room to go higher. All right, so that's our intraday game plan. Now, that's steps 1 and 2 of my training program, but step 3, there's 6 steps, but I skipped to only 3, right? Less is more in this game. So now I'm going to my 5-minute chart. What is step 3 for the day trader? That is looking for setup, the actual setup. So I've formulated my game plan. I have my expectations. I should be able to anticipate certain behaviors at certain levels in advance. That's what I've set up right now, okay? Now I'm looking for when can I get long or when can I get short? So I know the locations, but look where we are on Bitcoin, right? I switched over to the 5-minute. This is basically in the middle of nowhere. Look, we have nothing here. This is like basically like a midpoint. And as we know, as my students know, midpoints are highly random areas, right? So taking a trade there is basically, I'm going to be wrong half the time. So I'm not going to force any trades there. There's a very common mistake that beginners make, and they do this all the time. They take a trade, right? The trade happens to work out, and they think that they're onto something. They think, oh, I'm gonna take that trade every time because it worked one time. But what they don't realize is when you take that same trade 100 times or 1,000 times, the win rate of the win rate of that trade happens to be very low or happens to be random, and your results are going to always be mixed. All right, it's very similar to when you play poker. I bring up poker a lot because there's a lot of similarities, and an expert confirmed this for me. when you have a poker hand, okay, and you have basically like an average hand, or like a garbage hand, and you play that hand and you happen to win, right? Now you're going to be thinking, wow, next time I have a 4-5 offsuit, or a 3-6 offsuit, something totally not connected. 3-6 offsuit, I'm going to play that because I won that one time. Meanwhile, it's a really lousy hand, and most of the time when you play that hand, you're going to lose, right? So it's the same idea. You need to understand what the high probability setups are, and it's a behavioral thing, right? It's a function of behavior, and that will help steer you away from taking random trades like this one. Because look, if I went long, it's looking good, right? But if I go long the same trade 100 times, chances are I will lose over time because it's just completely random. The only way I could win on that is if I get some serious follow through, okay? That's where reward risk comes into play. Like if I happen to take it and it runs 100 points for me just randomly, right? But when I lose, I'm able to cut those losses much faster, then I can get away with it. But it's very hard. I would rather have the probability of it going my way being more favorable. Now, keep in mind, there's no like 80 or 90% win rate nonsense that a lot of people like to boast about out there. There's no such thing. Okay. I mean, good win rates that are sustainable are like 60%, maybe 70%, something like that. All right. That's what you're looking at in reality. Understand something about win rates. Over time, they change. They don't stay the same. So, you'll have a fake guru come out and show you, oh, I have a 99% win rate, right? And they show you a sample of trades. It's usually a very small sample, like 100 trades or 200 trades. That's extremely small, all right? You need thousands of trades, first of all, to prove that this win rate has some sort of sustainability. Basically, what happens is in certain environments, the win rate will be better than in other environments, right? So certain things may work like in a very strong trend market, like we saw like in 2021, and everyone thinks they're a genius. And then it doesn't work anymore when we go into a lousy market. Okay, so markets change. You have to make adjustments. Anyway, all right, enough of that. So let's talk about, taking a trade here. I don't see anything. Like I said, I'm not taking that because it's random. And now what's the story with Ethereum? So I just spent almost 20 minutes here talking about Bitcoin. What's the deal with Ethereum? Can I trade Ethereum? Well, I'm going to use the Bitcoin chart to basically cue me in onto the Ethereum trade because Bitcoin leads Ethereum. So basically, Ethereum may not look exactly the same, but the thing is, like right now, it looks like we have this green candle on the 5-minute. So we should be thinking, oh yeah, it's going to go somewhere. It's going to go somewhere. If this thing doesn't go anywhere, right? If Bitcoin fails, no matter how good this looks, it will fail because it follows. This is not a leader. So all these levels and all this stuff that I drew on the Bitcoin chart basically apply to the Ethereum chart. I don't have to redraw any of that stuff on here because I'm using this as my reference. So basically, you just choose which one you want to trade. Do you want to trade Bitcoin or do you want to trade Ethereum? All right. And if you're going to trade Ethereum, you use Bitcoin as your reference. That's the whole point. All right. So I covered a few things here, right? We talked about how we got the levels and expectations, right, based on the trend structure, based on support and resistance levels. And now I have to wait for something. Okay, this is the hardest part, is waiting, especially when the market's moving around like this, and you're like, oh yeah, it's moving. You cannot react to that. Understand something about markets like this. All right, and I'm going to pull up my ladder. All right, just in case if we have a trade set up, I'll have that set up so I can simulate. Again, the purpose of this is a training exercise. I'm not taking real trades with real money here. I want to make sure that that's clear. All right, now we have a situation like this, okay? And of course, your fear is going to kick in. Oh, I'm going to miss out. I'm missing out. This thing's going to keep going. But again, this is random. We have to always accept that this is random and this can turn at any point. We're not at a resistance level. We're not at a support level. If we're not at a support, taking this is going to be much more risky. I'm not interested in that, okay? I want something near the support. The market may not give me the support itself. I may not get that, okay? But at least I want to see some sort of pullback attempt. I want to see something better than this. I don't like that, okay? I'm not going to chase it. And that's the kind of restraint you have to have. You have to be able to watch these things and not take any action, because what will happen over time is you're going to get caught in the noise and you are going to pay for it. Okay, so let's see now how this thing is playing out. And let's talk about some other potential scenarios that we can see. What if we get a sell signal like right in this area, right? What if we get a sell setup like a bearish pin bar? Should I take that short? That would be a bad idea. Why? Because the bigger picture is bullish. Okay, we determined that earlier. If the bigger picture was bearish, that would be another story. Bigger picture as defined by the 30-minute chart. So I don't want to take any short trades unless we are at extreme prices, right? Way up there. Because if this thing's going to pull back, I want the best area or the place that offers the best probability. That's not going to be in a random area. You want this thing to extend itself. Okay. What's happening in a situation like this is, especially if this thing happens to run all the way up here, is you have longs chasing this thing because they can't control themselves. So they all pile in, and when they realize it can't go any further because everyone is long, they're all stuck, right? And that's the opportunity. Just like this over here, right? At one point, this candle was fully green into the area, all the longs were in, and then this happens, okay? So again, this concept occurs on many time frames. This is obviously occurring on a micro level, but as a day trader, we want to capitalize on that. So here's the thing. If we get the pullback, like it's trying to do right now, you see what I mean about chasing? If we get the pullback, that may turn into a long opportunity, even if it doesn't go this low. We can look for a higher low because the general trend, as we determined, is bullish. So you notice I'm always leaning on the idea of the general trend, okay? And if I'm going to go counter trend, which is, a possibility, it has to be extreme. Do you see where I'm going with that? Guys, let me know in the chat if you guys are following along, if you have any questions. Sometimes, I talk fast and I go over things and the market doesn't exactly show me what I'd like to, demonstrate, but I want to make sure you guys are on the same page and that you're learning something here, okay? Let me know if you have any questions. Let me say hello to a few people. We got Paul, Joel, Stacy, Armin. Good to see you all. All right, cool. So, again, all right. So here we go. Right. All right, cool, Armin. Thanks for letting me know. All right. Hey, Kai, good to see you. All right. Hope all is well. So again, yeah, by the way, I stream like this on Wednesdays only. I'm basically doing like this day trade exercise stream, I guess if you want to call it that. So this is the second day a week that I stream. So it's every Wednesday, basically at like 9:30, 9:40 a.m. Eastern time. On Mondays, I stream on TradingView and on here, but that's at 3 o'clock Eastern time in the afternoon. I'm having a problem with TradingView. I don't know why I'm not able to stream there right now. There's something wrong with the connection. I see other people can stream, but for some reason I'm blocked. So I have to, hopefully I'll have that fixed before next Monday, but that's a pain. Okay, anyway, I don't know if it's me or if it's TradingView or if they're blocking me. I thought they liked me. Anyway, maybe not. Okay, so hey, Alice, good to see you. Levant, all right, cool. Hey, Maxie, all right, good. Hey, Shell, how are you? Okay, cool, good to see you all. All right, so again, there's a lot to learn about being patient here. That's a skill that people don't really give any value to, right? Because people don't want to be patient. Patience is boring, but you have to wait these things out. You have to wait for the level. Now, one alternative to, instead of sitting here and watching this, which can take sometimes a couple of hours before we get the level and the setup aligned, right? Do you really want to sit here for a couple of hours? I definitely don't. You can set up notifications, right? Like the TradingView platform allows you to set up notifications. There are other platforms. You can just set up a price notification, and when the price gets to your price notification area, you get an email or you get a text message or whatever. And that's a good way to do it. So you can go about your business and do something else until the market aligns and you don't have to sit here for 2 hours. It's very important to use your time wisely. Otherwise, the market will waste your time. You can sit here an entire day and have nothing to do, or even worse, get into some trades because you have no more patience, right? Get into some trouble. And now you have a red day and you have to spend the rest of the day trying to make that back. And you may even get worse. You may even lose more. I've been in that situation many times as a day trader. That's one of the big problems. Okay. So That's why it really requires, you have to have some adequate experience in order to play this game effectively. People, they like to believe that lie that you see on YouTube where, oh, I'm going to buy my Lamborghini tomorrow because I'm a day trader, right? That's all nonsense. I hope you realize that they're all lying to you. It's very easy to fake P&Ls. It's very easy to fake all this stuff. Meanwhile, they're making money off of, like, they're selling training programs, or maybe they're not even selling anything. They're just making money off of YouTube revenue, the ad revenue. There are some fakeroos that just do that. So that's why I said earlier, it's very important to understand how this industry makes money. Usually when people come into this game, right, and myself as well, we don't give 1 ounce of thought to how the industry makes money. We only think from an egotistical point of perspective, right? We only want, oh, I need to make money. How am I going to make money? Opportunity out there is for me. Everything is me. That's the wrong perspective, right? But we all start out that way, right? That's ego driven. The first thought that should come to you when you come into this game, the first thought that you should have, which again, no one's going to have, is how does the industry make money in this game? Do you think like the industry go, oh, I'm going to put the RSI on here, and since we're a market maker, the RSI, you make tons of money with the RSI. Nonsense. They don't use RSI. They don't use any of that garbage. Okay. They don't make money the way I'm showing you. That's what you need to understand. What I'm showing you is what I believe the only chance we have as a retail trader. The industry doesn't make money this way. The industry makes money on spreads, on fees, on commissions, on being basically hedged. Okay. That is how the industry makes money. Your money supplies the industry with profits. This idea that you're going to come into this game and make money is mostly a dream, and most people will not realize it. My goal is to help you at least become objective and at least help open your eyes to all the lies that are out there, because 99% of this game is a lie. It really is. It's very deceptive. I mean, I've seen some amazing gimmicks out there that sound so good, and they're all lies. No one makes money. Okay, most of these people, especially that push these magical systems, they're lying to you. So it's my hope that I can at least get you to realize how false this industry is, and at least show you what it takes to actually be effective in this game, if that's your goal. Being effective means controlling your losses and growing your account over time in a sustainable way. Okay. Another thing that I want to mention here about this whole, I know I get on these industry rants, but it's important. One thing I want to mention is I know that what I say is very unpopular, and I'm not going to change because these are my beliefs. And I like to consider myself an advocate for the retail trader, since I am one as well. Okay. Most people are not going to listen to me, right? The average person doesn't want to hear what I have to say because it's not sexy. It does not instill hope. It's about reality and being objective, right? All these boring things. So that's a good thing, actually, if you think about it, because the profit potential that we go after comes from these traders who don't know what they're doing and that believe the lie. So it's actually better that more of you believe the lie and believe the fake gurus than believe me. Okay, it's actually better for everyone that way. I know that sounds strange, right? It's counterintuitive or counterproductive, especially for my effort, but it's actually better that more people don't listen to me because these are the people that we profit from. All right, now look, we have an inside bar developed right there, okay, which is interesting. This is not a good location, and I'm not going to sit here another hour and watch this thing develop, but I'm going to point this out. This right here is an intraday bullish continuation pattern. It's an inside bar, right? We had this bullish movement and no pullback, not yet, and then inside bar. So inside bars, basically it's just a candle inside a larger candle. This red candle range is inside this green candle range, okay? That's an inside bar. So they're the same as consolidations. It's just happening on a very minute level. It's happening on a very small level. Now, the theory here is if it breaks above the inside bar, you have a long signal, right? If it breaks below the inside bar, you have a short signal. The problem is with this. Inside bars, just like pin bars, appear randomly, right? So we can't sit here and say, whoa, I'm going to take this because it's an inside bar. Don't focus on the setup, focus on the location. If this inside bar was up here, I'd say, oh, okay, maybe we have a sell signal here. Okay. If the inside bar was over here, I'd say, oh, a buy signal. Okay. But instead, we have the inside bar here in the middle of nowhere. Should I take that? No, because it's random. Do you see how I filtered that out? So an oscillator will not help you do that. Okay. In fact, if I had the RSI on here, the RSI, I'm guessing, would be over the 50 line, which would be saying that this is a long and that I should go long, right? That's what it would be saying. But the problem is it's not accounting for the location, right? So it might work, but it's 50-50, right? I don't need the RSI. I can just flip a coin and I can get the same result, right? Over time, it will be the same result. That's the whole thing. I don't want to flip a coin. I want this to be more in my favor. So we're just not at those levels, right? This market sucks. Let's take a look real quick at the NASDAQ, because the NASDAQ is a big thing that can give us clues, right? Now, this is the 5-minute NASDAQ chart. Check this out. Hey, Han, and I've talked about this before, the correlation. And as we can see, the NASDAQ has been strong today, earlier, right? Just going back, what is this, 5, 10, over the previous half hour, all right, going just before 10 o'clock here. The NASDAQ, this is a nice structure on this 5-minute NASDAQ, okay? Nothing but bullish. The NASDAQ right now, look at the bearish pin bar, okay? Look at that. And it's been selling off a bit here. This, and look at Ethereum. So this is your real leader, is the NASDAQ. So knowing this, right, and seeing that the NASDAQ made this attempt, this rally attempt, and now it's giving it back, right? You should really have this up with Bitcoin at the same time. With that thing pulling back, I should know better not to go near this thing, okay, long. I should not even go near it. That's actually, that's not the perp chart. Let me go back to the perp chart. I should not even go near it long at this point, and I shouldn't short it either because it's conflict, okay? It's conflicted on both sides. So here, let's just move this. I'm going to change this Ethereum chart to the NASDAQ so we can look at them side by side. Look at that. Look at that selling happening in the NASDAQ. Interesting. Do you think Bitcoin's going to be a long here? You would be foolish to think so, all right? Because Bitcoin follows this. It doesn't trade on its own. There's the sell signal, all right? Again, I'm not going to short that, though, because we're not at the short location. This thing is going to fake out a lot of people, most likely. So there must be, is there news? This looks like a news candle. Could be. So it gives it back. Again, nothing to overreact to. It's just giving it back, right? Usually when people see a large candle like, oh, the NASDAQ is selling off. Oh, don't overreact. It's just a little tiny little pullback, okay? What is that? 670 to, what is that? The NASDAQ moved 50 points in 5 minutes. That's normal. That's very normal for the NASDAQ. So the thing is, this structure on the NASDAQ is generally bullish, which means what? I said earlier, supports are likely to hold, right? So let's see how the NASDAQ does around that support. If that support holds, right, that may give us a buying opportunity in Bitcoin, right? So you see how Bitcoin pulled back off of that inside bar a bit, but we're not overreacting to it. We're looking for supports to hold, right? If we get the buy signal off support, there is your day trade. Now, if the day trade happens, right, it's probably not going to happen during my stream here because I'm not going to wait here 3 hours. But if the day trade happens, like off of this area, you're only targeting about 80 to 90 points, right? That would be ideal. And you're looking to risk about 50 or 60 points, right? That's less than 2 to 1, right? A little less than 2 to 1 or whatever. But you want a reward risk, something like that, okay? And that's within reason. Trying to make like 80 or 90 points intraday on Bitcoin is within reason. And losing about 50 or 60 points is within reason. So those are your parameters, all right, that you know in advance. You don't have to go measuring anything on your chart. You know this in advance. So when the order is placed, you place your orders, and now the market does the work. Okay. I have a question about the market. Okay, about the market maker. Don't they go against each other, or they agree? How does the system work? They say, okay, no. There's no conspiracy. They're not allowed to collude. That's illegal, okay, in most markets. I mean, Bitcoin's not regulated that way, but, again, we're not talking about like low volume penny stocks here, that which can be manipulated. We're talking about like a heavy index market, meaning it's very expensive. It's very hard to move this market. You have to have a lot of money to move this market. So yeah, a market maker can maybe play some games like with the order book, but there's no way that they all sit there and say, hey, today we're going to make this week. And that's all conspiracy theory nonsense. Please don't believe any of that. The goal of the market maker, first of all, the general goal of the market maker is to make a market, which means when the market is selling off, they provide a place to sell to. So you need to get out, you bang it out to them, and they're on the bid because they're making a market and they're willing to buy. When the market's going crazy to the bullish side and everyone wants to buy, they have to be there to sell to you, right? That is the actual job of a market maker. And they're supposed to be, like at least in the stock market, right? They're regulated and they have to follow these rules. In the stock market, they're just making money on the spread, and they usually have what are called delta neutral positions, which means they're hedged. Okay, so they're usually not taking a side of the market. They're hedged, and they don't care which way the market goes. They just have to provide. They have to do their part, and they have to, they have to sell when people are buying, and they have to buy when people are selling. That is what a market maker does. All this nonsense about evil market makers and blah, 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 blah. It's just conspiracy theory, retail trader nonsense, okay? Now we're talking about real market makers. Then you have these exchanges, like, well, we saw FTX. Were they really making a market? They were artificially pumping up their FTT token, right? Which is a market makers, they can do that. They can make something look more attractive than it really is, right? That's part of their function. When they want something to move, when they want a market to move, they can sort of position it a certain way, okay, to stimulate demand, okay. But we saw with them that was a whole fake. Were they really doing what a market making firm does? No, they were just stealing customer capital, right? So you can't really count them. But you have Binance, right? They're an exchange. Now, if they're taking the other side of their customer trades, which again, there's no regulation, they can do that like a Forex dealer. Well, then there's a conflict of interest, right? And all the money in your account, like in the customer accounts, that's potential profit for them. So they're going to do whatever they have to do to get people to trade because they want people to trade so they can take the other side, right? You have to read the fine print very carefully to see what their function is because they're not regulated like a stock market maker. Does that make sense? I know I just said a lot of stuff, but either way, don't get caught up with the conspiracy theories, okay? Don't get caught up with that. Understand what their actual function is, and if they deviate from that and they cheat and they're in a regulated market like the stocks, they can get fined, heavy fines, and they really don't want to get involved in that stuff, right? But the SEC, of course, they're not exactly, they're asleep half the time, so I don't know. The market maker will try to get away with what they can, but if it becomes blatantly obvious, they usually get in trouble. And I've seen it happen, especially on the Forex side of the world. I've seen a number of market makers get fined by the NFA for pushing people out of their positions by changing the margin requirements on a Friday without telling anyone. So you think, oh yeah, I have enough margin in there. And then they change the margin requirement on you. And then Monday you open up your account and there's no money in it. How was I margined out? Margin account, the margin requirements change. Oh, we forgot to tell you. Okay, so yeah, they got fined for that. Forex.com, it's public information. So that was a long time ago, but they were doing it. Okay, and I used to work for them, but I was in sales. I wasn't on their trade desk. Well, everyone thought everyone on the trade desk, they must be like good traders. No, they were just as dumb of it as everyone else on the trade desk. That's why they've been replaced by algos. Okay, various ways, and they are towards you, market maker. Big market makers like investment banks can trade against their customers. Well, yeah, they can do things like that, sure. Kai, that's true, right? They have their hidden ways of doing things, but not, they don't conspire and say, well, let's all do this and fix the price. They can't do that. They'll get in trouble if they get caught. I guess they can try, but they'll get in trouble. Proprietary is not allowed anymore for investment banks, market makers since the GFC. Right. So yeah, so they have to be a market maker, right? They can't trade. They're not allowed to trade like we trade. Right? There was a time when they could. I remember those days. But anyway, All right, so all this talk, all this ranting here, and there's nothing going on. There's nothing here. All right, so just a couple of points I want to make is it's a good thing I was not overreacting and chasing this thing, right? Like a lot of people, oh, you're going to miss out. I haven't missed anything. Okay, pull back. We had this little attempt over here, which turned into nothing, and now it's just pulling back. Great, going into support. Look at Ethereum. Okay, I'm sorry, that's not Ethereum. The NASDAQ, right? The NASDAQ found support, right, at this level, and it gave us an inside bar on the bullish side. Okay, so again, these are 5-minute charts. What is this thing going to do? It's giving me a buy signal. The NASDAQ is giving me a buy signal. So what does that mean for Bitcoin? That means the buy signal may be coming soon, right? And now we're in a much more attractive location, and the bigger picture supports the bullish side. Do you see how the mentality comes together? Now, so we're almost aligned here. Okay, we're almost aligned for a day trade long. It's not allowed. Well, it's not allowed. Let's put it like that. If they do it, it's another question, right? Just check how many times big banks were fined. Right. Well, right, Kai. It's theoretically it's not allowed, but I mean, they get fined, so there's probably going to be less of that activity than more of it. If they can get away with it, they'll try. That's the thing. That's why you need regulation, because if a company like that can screw over their customers, they will. It's human nature. Okay, and I've seen that, and like I said, on the forex side, I've seen all kinds of crazy things that they would pull and get away with. But if they're caught, it's illegal, right? Because they're regulated, so they have to be careful, right? And they can't make it like a regular thing. But the Bitcoin world is not regulated, right? Not yet, but it's coming. So we'll see how that changes things. And that's why I suspect again, I could be wrong, and I don't like to have opinions, but the Bitcoin world is going to face some unexpected surprises, perhaps. They can come from that, with some unexpected regulation. And it's very possible that a lot of these altcoins vanish as a result. That's what I suspect, because I saw that with the .coms, right? And a lot of people, now's the time to buy altcoins. No, it's not. Okay, I'm very not interested in them, because I want to see how the regulation shapes things, and it's coming. No one's talking about it, right? It's not on the mainstream. It's not in front of the mainstream eyes just yet, but it's coming. Okay, yeah, exactly. Anything goes, but that's likely right. Exactly right. Exactly right. So Kai just basically everything that I just said basically is in line with what Kai is saying there. That's why I don't touch these things. Like I'm putting together a speculative growth portfolio, which will include some of these, but I'm not touching altcoins right now. I'm only focused on growth stocks, right? Which I haven't put any in the portfolio yet. But I'm not touching altcoins until I see how the outcome of this regulation, because I suspect most of them are going to go to zero. A lot of them are going to vanish, because they're not welcome. First of all, in the financial system, they are not welcome, right? And big banks and the powers that be would like to probably see them go away. And now they have a good opportunity to do that with regulation. Okay, and we saw exactly, regulation is not always good for the little guy. As we saw with FTX, your friend there, SBF, he was a big proponent of regulation. Meanwhile, none of it applied to him, right? So that's what you're dealing with when it comes to regulation. I mean, you're going to have basically the powers that be gear it in their favor, right? So, I mean, I would imagine the Federal Reserve would be very happy to see many of these altcoins just go away, all right? And they would probably be happy to see Bitcoin go away as well. But Bitcoin is not a security, so it's not going to be able to go away so easily, right? When it's mined like gold, right? That's like the major, that's what separates Bitcoin from something like Ethereum. Although Ethereum is mined, Bitcoin is more like gold. And you have some of these altcoins that are just completely centrally controlled, which makes them securities. You're going to see a lot of them go away. All right, we saw this 20 years ago, like I said, with the .coms. History repeats itself. Okay, so that's why I'm not any of these pops and these altcoins. I'm extremely suspicious, and I'm not touching any of them for my portfolio. And my portfolio is highly aggressive and speculative, and I still won't touch those coins. Okay, I'm looking at growth stocks, like I said. Okay, yeah, I'm not going near them. Okay, anyway, all right, you guys. So we're not getting the setup. Bitcoin's just not cooperating here. So look at this. Look at this pin bar, right? There was an attempt, but never activated. And as you can see here, we're going back toward the support, right? It's beginning to align. Look at this over here, right? The Nasdaq. We had this little buying attempt, and this is why you cannot use this chart and say, okay, this buying over here, I'm going to buy over here. You cannot do that. You just have to use this as a point of reference. So even if I get a buy signal on the Nasdaq, it doesn't mean that I'm going to just jump into Bitcoin, because they're not connected one to one, right? So now that I see this, okay, cool. They're both pulling back. Great. Now we'll see how Bitcoin behaves in the support zone that I have predetermined. And if the Nasdaq manages to give me a double bottom or some kind of buy signal again, and I get a buy signal in Bitcoin, right, and it activates, then at least you have a level and you have a setup. Okay, and then from there, it's about the reward risk, which again, you can't sit here and use a chart and say, whoa, I'm going to put my target up here because that's where I want to get out. You have to basically just look at the typical movements. And like I said, 80 to 90 points, if you can pull that out, that's great. Okay, that's a big win right there. Even if it goes further, it doesn't matter. You should be looking at like an average take profit of about 80 to 90 points, something like that, with an average risk of about 50 to 60 points. Like I said, those are preset parameters. And you know that from just looking at the average movements. So if the trade goes off, that's what you're looking at. Okay. And the way to ride, people always ask me, well, how do you capture the whole move? Because again, you're being driven by ego and greed. But the answer to that question is you have multiple contracts on, right? You're not going to be able to do it with one contract. So let's just say, because we're talking futures here, you have two contracts. So you sell one at basically 1-to-1 reward risk, or 1.5-to-1 if you can get that. And then you let the other one ride until you get the conflicting signal. That's where, if it happens to be a broader move, you get to participate in that, right? And you're letting the market determine. The market's giving you the answers. As soon as a conflicting signal comes up, you either move that stop to break even, or you just get out and take whatever you got. Okay, that's how that works. Profit targets are determined, at least the way I like to determine them, as a function of reward risk. Meaning, if I'm risking 50 points, then 100 points would be a good profit target. 150 points would be another good profit target. 200 points would be another profit target, right? I'm not using technical levels on the chart. It's a function of what I risked. Okay, that's a very important thing. And even though I just explained that, people are still gonna. So how do you determine the profit target again? Do I use like the fibs or something? No, it's a function of risk. So if you're looking basically at making double what you risk, in the long run, you will do better. Okay, you will at least have an expectancy that's on the positive side or profitable side. All right, 1-to-1 for a day trade is iffy. The problem with 1-to-1 is your cost, because especially if you take a lot of trades, you're going to still have a losing proposition because of the cost. All right, that's a problem with day trades. With swing trades, the cost is not as significant, because you're not taking as many trades. All right. Anyway, all right. So you guys, no setups, but you can see how I was able to avoid this, buying into that, buying into this, right? And now we're having the location. Okay. And I also demonstrated how you can use the Nasdaq to help you as a guide. Sorry, but no actual trades. But again, no trades is basically a trade, because this saves you. I could have had 2 losses here, all right? But instead I have 0. And now when the real setup comes along, I'm in a good position to at least come away with something green. Does that make sense? All right, you guys, so I'm going to leave you with that. If you guys have any questions, again, you know where to find me. Check the links in the description, because that is where my Discord link is for my community. I would recommend that you come in there. There's a free area. I have a lot of new features coming, so it does pay to become a premium member. Right now, my active investor chat room is focused on options, and I think I'm going to keep it that way, focused on options. I don't talk much about options here, but I'm going to have other things for people that aren't interested in options, okay? For basically like day trade setups and swing trade setups and all that kind of stuff. So it's coming. All right, anyway, if you have any questions, you can send me an email. Give me like a day or two to answer, but I will answer. All right, so enjoy the rest of your day, or the rest of your evening, wherever you are in the world, and thank you very much for watching.